Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was the #1 U.S. stock market timer in the January 2020 edition of Timer Digest. He's speaking to us from Arizona. Welcome back to the show, Mark.
Thanks, Jim. Always fun being here.
Mark, do you still have your special offer for our listeners?
We do, and we're getting some response to it, so thank you for mentioning it. When you get to VRTrader.com, you'll see a whole series of newsletters up on the screen. We cover gold, we cover the general market, we have cannabis, so forth and so on. So you pick your letter, but any letter you pick when you get to the order form, there's a little space for a promo code, and the promo code is 2020 half off 2020 HALFOFF, and that gives you 50% off for any product or for any specific time frame, whether it's monthly, quarterly, or annually. So please take advantage of it. It will end by the end of the year.
Mark, for people new to VRTrader.com, what started it and what kind of a media background did you have to promote it?
Well, it's funny because I wasn't looking to get into the stock market, and this goes back many decades, back into the 70s, and met this fellow who was a trader at a brokerage firm, and he had interesting stories about how his name was Roger Cole, how he was there on the floor of the exchange way back in ancient times before they even had the electronic ticker tape, and it was all on little paper strips and those little glass bubbles that we see in the history books and in the old films, and where they had chalkboards on the wall where you had to write the prices of the stocks, and knew all the so-called founders of the big brokerage firms. And he was probably in his 80s when I met him in the 1970s. So the long and short of it is he started talking to me about the stock market, got me interested in it, started showing me some technical analysis tools that he either created or he had learned. And then a friend of mine, I grew up in South Florida. He had an uncle in Chicago who was one of the principals of one of the larger commodity firms. And he mentioned to me, I think this was 1973, hey, they're opening a new exchange in Chicago called the Chicago Board Options Exchange. Now, I knew a little bit about options, but not very much. That time they were just traded like over the counter. There wasn't really an exchange for options the way we see today. So they were creating this new exchange, and they were selling seats at a real cheap price. I think it was like $10,000 a seat just to launch the exchange. So a friend of mine said, well, I have an uncle up in Chicago. This is a friend of mine from college. And would you like to learn more about the stock market? Maybe we can buy one of these seats and see what it's all about. So the long and short of it is I got on a plane, go to Chicago, and get on the floor of this new Chicago Board Options Exchange, take a floor test. Really knew nothing about the stock market other than, the average person, that it's prices, and check the quotes in the paper every day, and you have some favorite names and so forth and so on. That's the way the average person would address the market. And take a little floor exam, get yourself registered with a clearing firm, get yourself registered as a broker-dealer, and you go down there and you know nothing about nothing because it's a whole new situation, and you stand there in a pit and watch all these prices move around on a board, and they teach you, well, if you want to buy here, you hit this button, and you raise your hand this way, and you start learning from the seat of your pants that, you try to buy on the bids and try to sell on the offers. Brokers come into the crowd from the various major firms, and they're looking to buy or sell, and you're standing there with other guys. We call ourselves market makers, and I guess whoever's first or yells the loudest or raises his hand gets the order. And you the idea is to facilitate the market. So you're not investing. So they come in, you're trading an option in some stock, and let's say you buy it at $1. You immediately raise your hand and offer it $1.25 or $1.10 to try to make a profit on it. And then, there's a lot of action in the crowd, and generally there's a lot of movement, and the chances are pretty good that, you're out of it in a few seconds or a few minutes and you're trading. So, you just learn from the seat of your pants, you learn the rules of the floor, and, this is sort of how I got started, just not knowing anything other than the general stuff about the market, but then watching it being moved, watching the traders, watching the floor brokers, watching the stocks, and you can wander around the floor and trade different options, or you were assigned to a specific area, you were allowed to trade elsewhere. But it gave you tremendous flexibility, and we can go into other parts of my background another time because we don't have infinite time on this interview, but it's sort of interesting down on the floor in those days, just sort of an anecdotal reflection of what happened down there. Interest rates were a bit higher back in the 70s than they are now, as you know. And what the angle for most of the traders down there was to sell out of the money options. And when you did that, it created a credit balance in your trading account. And now the rules for margin and everything were completely different for floor traders than for us mortals here that have brokerage accounts. So, for a very little money, maybe $10,000 in your account, you could probably sell $1 million or more of out-of-the-money call options, create a credit in your account, and then they would pay you what's known as broker call rate, which is the interest rate brokers pay on interest on for using the money in your account. And if I'm not mistaken, it was up there. It was 7 or 8%. It was a decent amount of percentage. So guys would generate huge credit balances in their accounts selling out-of-the-money options that most of the time expire worthless. I think what the rule is 2 out of 3 times, the out-of-the-money calls. Now they have out-of-the-money puts. If the stock is the same or changes little over a period of time, there's 2 out of 3 chances the option will expire at 0. So you generate this huge credit balance and interest return in your account. And these guys would make a great living just every quarter because they have more option expirations now than they had back then, just generating this great cash flow by just selling all this premium that was, it's all fictitious anyway. I mean, just a number, someone says, well, what's this out of the money call worth? They give it a price and, it's traded and it can move around, but there are exceptions, or sometimes when the market had a big move and some guys did get caught. I mean, nothing's 100%, but that was sort of the life down there at the time. And, it was very interesting also because this time in Chicago, Playboy was very active. And Hugh Hefner was very active down in that area, and the Playboy Mansion was just down the street. So there were a lot of Playboy bunnies running around as runners on the floor of the exchange. And though it's mostly a male institution, there were a couple girls down there that I did get to know who became pretty famous traders later. But they did hire some of these bunnies. And I tell you one thing, one of them came into the crowd. The trading stopped. And everybody was gaga over this gal that runs into the crowd to deliver some message to somebody. So it was a very interesting time down there. It's the period of history on the early days of the Chicago Board Options Exchange. And it was a very physical environment, Jim. I left the floor after a while because you had some former football players down there that were trading, and sometimes if you get into a dispute with them and who's first on a trade, they're like, 10 feet taller than you and a lot more muscular, and you don't want to get into a fight with them, so you tend to back out of the trade. So the bottom line is I left the floor, and there are some occasions of floor fights down there too. Some guys didn't like the guy next to him, and he slugged him because he didn't like what was going on. And then there was a fine for doing that, usually a couple $1,000s if you hit somebody in the pit. And some guys were willing to pay the penalty just to get it out of their system. So if you can write a book about that time on the floor of the CBOE, and we could pick up at another point where I went from there. But that was sort of the beginnings for me.
We'll have more with Mark Leibovit right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Mark Leibovit. Mark, is it a warning sign when stocks are split? I'm just thinking if both Apple and Tesla split their stock and a few days later it plunged. Is it a warning sign, or was that a unique thing that happened?
No, you're right. You're right. Generally, the stocks tend to run up in anticipation of the split, and it's just a greed factor because they figure it's going to go higher. And ultimately, in many occasions, that does ultimately happen anyway. It's a cheaper stock. The story is strong. More people can afford a cheaper stock than an expensive stock. People that might want to have bought, Tesla at $2,000 a share don't have that kind of money, but when it's trading at $300 or $400, it's still expensive, but maybe they would do it. The typical situation, you got stocks that are trading well under 100, not as we see now, names like Amazon at 3,000 and Tesla was at 2,000, and those kind of numbers. This is like new history for the stock market. That in the old days we just never had stocks. A couple exceptions, but generally not at these levels at all. So, but yes, it's the anticipation drives them up. They get overdone, and they tend to pull back. It doesn't mean they won't go back up to where they were. And if the stories are strong, and we learned this with Apple over the years, they keep splitting it and it just keeps going higher. At some point, it changes, technology changes, competition changes, and the Apples of the world aren't the Apples of the world anymore. There's new players. We saw the Nifty 50 stocks back in the 1960s and 70s. They all disappeared, like the Polaroids and the Xeroxes and all those names that were the ones you had to own forever, and that wasn't the case. So at one point, you just assume Amazon will find a competitor that we don't know about yet. Apple will find a competitor we don't know about yet. And all Netflix and all the big names, maybe it could be a decade away, it could be a year away, and all the high flyers disappear. So over history, the high flyers do disappear. And you think about all the big names. I mean, look at even a high flyer at one point was General Motors, and they went out of business during the financial crisis. The stock went to zero. So anything is possible in the stock market. So as a general rule, when they announce a split, if it's a strong stock story, it tends to trade higher, and it's generally a good time to sell. If you're a trader, and I guess if you're a long-term player, you sit with it.
What kind of sentiment are we seeing among traders right now?
Gee, that's a tough one. I guess everybody's a bit nervous because of the election and what that's going to mean for the stock market. I mean, that's sort of the sense. But if you really check history, it really doesn't make a difference who wins, because ultimately the stock market is going to do what it's going to do anyway. And we find through any political situation, whether it's the Democrat or Republican, you go back over history, there's bull and bear markets no matter who sits in the White House. Now, this doesn't mean I agree with who's sitting in the White House. I have my own opinions. I'm more of a Trump supporter and have been because he's pro-business and he's so non-conventional in the way he approaches stuff. It's a breath of fresh air versus the typical political climate that we've seen over the decades. And the fact that he's so bold and has done stuff, particularly getting the embassy in Jerusalem, which I thought was terrific. But stuff like that, the traders, getting back to your question, I just think that there's anxiety. September, October, historically, sometimes it can incorporate, sell-offs. We've seen a lot of crashes during this time of year. Plus, you got the election. So I guess that's probably the biggest thing. People could say, well, you're wrong, it's the virus. It's going to come back, and then the Democrats get in, they're going to shut down the country, and that's going to kill the market. And of course, they wouldn't get in until January anyway, even if they did win the election. So maybe that is another concern, worrying about the virus. But I think I would advise everyone that, there's tradable opportunities, no matter who's sitting in power, outside of having the communist government take over Washington, outside of that extreme statement. So many feel that the Democratic Party is getting closer to the Communist Party, but that's a point to be argued. But
well, the People's Party in China seems to be pretty pro-free enterprise as long as they make money on it.
Right. Well, that's the point I was going to make. I'm glad you brought that up. You can be a communist party but be a capitalist at the same time, and I don't think, there's actually more capitalism, frankly, in China and Russia than there may be in the United States and Canada on a certain level. These guys are out to make billions and make money, even though they like to control the government itself. But as long as you make them partners in what you're doing, and they can make a lot of money, they're happy too. So those who proclaim communism or socialism as the answer to the world economic system forget that, as we learned in the book Animal Farm, some are more equal than others. And the big boys like to make a lot of money, even though they call themselves communists and want to have everybody share among themselves. So that's really sort of the perverse statement here about believing in socialism or communism, because those who are the biggest at it are the biggest capitalists, and they all realize that you're not going to make money being a communist. You got to make it somehow, and you make it through capitalism. But anyway, I think the worry about the election and the virus might be two of the issues, but really a point I want to make is we're going to make money no matter what happens. I mean, outside of shutting down the markets, of course that happened during 9/11 where they actually shut the markets down for an extreme reason, but the markets are open and we don't have any other type of catastrophe or black swan event out there of some kind. But, there's going to be sectors that are going to be strong. The market itself may sell off, but it most likely come back, and maybe banking stocks don't do as well as solar stocks, or cannabis stocks come back again, or gold stocks do great. Or no matter who's in the White House, they decide they want to spend a lot of money in infrastructure. So all the cement and steel stocks do well as we build, and copper stocks do well as we expand the infrastructure in the country. So I'm not worried about money not being spent and that money not finding its way into the stock market.
We'll have more with Mark Leibovit right after this.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, what's the trend right now for the U.S. dollar, and will it continue?
I'm still leaning a little more bullish. It's way oversold. It's trying to fork out a bottom. Many are saying, well, the spending bill is going to come through and that's going to weaken the dollar, and maybe they're right. I'm just looking at the charts, and it looked to me like if those are familiar with technical analysis, looked like a little bottoming saucer, as they call it, saucer formation, like a little bowl, like it's trying to round off on the bottom here. And that really hasn't changed. Had a little zigzag the last couple of days, but it seems to be trying to forge out some type of short-term bottom. So I guess if the lows come out, I'm wrong. But if it does rally, that could be at least what's happened in recent weeks and the last few months is the strength in the dollar could weaken stocks and precious metals and commodities temporarily, I suppose. I've mentioned this before. I don't like really tying the markets together. I've learned over the decades that if you say the dollar is up and gold has to be down, or the dollar is down and stocks have to be up, you can get caught, because many times that doesn't happen. There are exceptions, and I like to evaluate each market separately and look at the chart. So I'm not concerned if the dollar rallies or not as a as a cause effect into the stock market or the gold, though many are thinking that way. So the current thought is if it does rally, that would possibly put pressure on stocks and gold. We'll see if that happens if the dollar does rally. And my thought, it could rally, but it doesn't stop stock market and gold market doing what they want to do. So I'm not going to say gold and stocks are going to go down because the dollar is going to go up, but the dollar may go up anyway. So let's see what happens. Mark, before we go, can you remind people again about your special offer? Sure, thank you, Jim. It's 2020 half off, 2020 HALF. It's a promo code. Go to vrtrader.com and pick your newsletter and enter that code, and you can get 50% off for any newsletter for any time frame you select. And thank you very much. Mark, thank you so much for being on the show. Anytime. Thanks, Jim. My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.